Hi there, this is Mike Larson, Editor-in-Chief of The Money Show, and I'm here at the Las Vegas Money Show with John Person, CEO of Person's Planet. John, welcome to the event.
Well, thanks a lot, Mike. It's a great event here.
Right.
Great event.
You know, it's great to see the crowds out again. I mean, really nice, engaged crowd. I actually saw your live trading presentation earlier. It looked like standing room only. So what are you seeing in this market? What kind of environment and sort of outlook do you have for things, given what your work's showing?
So longer term, I still think that the market's, you know, in a very major trading range. You know, there's a lot of talk about third-year election cycles are pretty popular, and I still see, despite the higher interest rate environment, I still think the Fed's got to tighten up a little bit. Money is still very strong. Consumers are still very strong with money, and there's, you know, flying out here to Vegas. I mean, every flight is packed. People have money. People are spending money. Here in Las Vegas, the tables are full. People are gambling.
I'm still looking for that $10 table. It's hard to find.
So what Mike was saying is that when there's so much competition and people come out to play on a table, they don't have the small denomination tables. They have higher denomination, and that's the reference. And I think that bottom line with travel, seasonality, we're starting to get into the spring, summer months. Some of the areas that I like are in, as people have avoided surgeries, maybe perhaps the fake knees, the fake hips, the testing, the dermatology, the, you know, I don't want to be too rude, but colonoscopies. There's a lot of testing facilities that are doing phenomenal business. Hospitals, Healthcare America, HCH is a stock, and unbelievable earnings, breaking out. I'm not a big fan of maybe the insurance companies, but I think that there's a very strong opportunity in sports, whether it's sportswear as well as sports medicine and testing. So maybe a Quest Diagnostics, Perkin-Elmer, Medtronics, which had a good report. Some of those names I think should carry forward. Columbia Sportswear, Nike certainly has still got the juice, so to speak.
So that's what we got. MDT, right?
MDT is
PKN,
Medtronics.
I think,
PKI is
PKI,
Perkin-Elmer. Thermo Fisher reports, and you know, I don't think it was that great, but anything that has to do with COVID testing is probably going to be under pressure, because people are like, as this show shows, no masks. People are not done with COVID. It's still a real thing, and it still is affecting a lot of Americans, but I don't think people are willing to get tested all the time now.
Yeah, sure, absolutely. Now, John, talk a little bit about your methodology. I mean, you know, how do you approach trading this market? What are some of the things that you look at, and what is it that you're educating investors and traders about here at the Money Show? Sure.
So when it comes to equities and stocks, I do run stock scans, and I'm looking for price, and I'm also looking for, you know, in the staple of the general market, which would be the S&P 500 or even maybe the S&P 600. What I'm looking for is, depending on the sector, I'm running scans with a tool that I created called the PPS indicator. It can be found on Thinkorswim, which is now owned by Charles Schwab, and other platforms, Trade Navigator with Genesis. So I'm looking for a couple things: relative strength to outperform the overall market, and there's a tool that's on Thinkorswim called the PMC indicator. It's a highly visible momentum indicator of relative strength. It's very advanced, easy to use, and it's dynamic. And the other one is volume. I'm a big fan of using volume trend, not the volume histogram, but maybe Joe Granville's on balance volume to show whether or not there's a basing. I still believe in this day and in this environment that volume is the lifeblood of the market, and if a market has legs, then there should be participation with it. So therefore, on balance volume is still a very, it's a great tool in the absence of none. Let's put it that way.
Got it. Okay. Now, when you're talking to investors, traders here, what kind of questions are you getting, and what kinds of advice are you giving them for this market? I mean, you know, is it an extremely volatile market? Is it one where you have to be more defensive? How would you characterize it?
So we've been in a trading range, and it's interesting. We've had so many people since the beginning of the year. I mean, not every pundit, but there have been a lot of people very, very strongly prognosticating that we're going to be in a recession, and I think that recession talk is getting kicked down more down the line. When you look at housing, whether it's Pulte, Toll Brothers, D.H. Horton, which had earnings which at almost new highs, people are still buying homes. I still think the core inflation is still prevalent. It's starting to weaken, but not enough. I think we're going to need time there. I believe that there's, as we move forward, good opportunities will persist in a very select space, and that's because more money has come out of the equity market into short-term treasuries. A lot of guys, even myself, for the first time, it was a coincidence, but it was the week when SVA, as Silicon Valley Bank was going down. I think I helped offset their loss because I bought a 6-month T-bill, the maturity date's August 24th, and got locked in at 5%. A 5% T-bill for 6 months is absurd money. And the problem there is, though, that money's tied up and will not be in the equity market. And so there's whatever money is in the equity market will be washing and rinsing, and you're going to see maybe that cyclical rotation. Not cyclical, but you'll see rotation out of semis, maybe into consumer discretionary or utilities for a little while. And when that trade fades, then they'll rotate somewhere else. That's what I see the problem with the market. Are we volatile? Not really. The 10-day ATR in the S&P 500, we're in one of the tightest, narrowest ranges that we've seen in probably 8 years. I mean, we're sitting in an S&P before this event, at around the VIX was trading at around 17. It dipped to 16 and change, 1665, I think. But the 10-day ATR, that's the average true range, was down to around 365. 3.65 for a 10-day range of the S&P, the spider, is very tight. So until we see an expansion of that range, until we see more volatility, it's kind of a pain in the neck market. There's no follow through on breakouts. There's no follow through on breakdowns.
Got to be patient. Got to just navigate the market you have. Maybe not the one that you want, right?
Right. Exactly.
Awesome, John. Thank you so much for your time here at the Money Show, and thank you all for watching. Coming to you live from the Las Vegas show.
Excellent.